Hi, I'm Joel Schneider. I'm the Deputy Head of Portfolio Management at Dimensional Fund Advisors, and you're watching Taking Stock.
Time to rock and roll, folks. Welcome to the show. 2 minutes to go into the closing bell, and as of this minute, 2 hours and 26 minutes left to go until the launch of Artemis II. Investors here on Wall Street taking advantage of a second consecutive, more or less a relief rally. Once again, the S&P 500 in positive territory, up about 0.8%, rather. This on hopes for a swift end to the conflict in Iran and the Middle East. President Donald Trump set to address the American people tonight in prime time. Investors and the American public eager to learn more about the expected timeline and much more over that ongoing conflict. Welcome to the broadcast, one and all. You're watching Taking Stock. I'm your host, JD Durkin, here live on the trading floor of the New York Stock Exchange. Just a few moments away, my friends, from the ringing of the iconic closing bell here at the big board. And investors like what they see as we await further commentary from the White House tonight. The S&P expected to finish up 0.8%, the Dow up 0.5%, the New York Stock Exchange Composite Index up at this hour about 0.5%, and the small caps up 0.7. Tech, industrials, and discretionary, those are your strongest performing sectors in the S&P 500. And as is often the case for a bit of a risk-on trade for investor sentiment, energy and staples, your S&P 500 laggards to the downside. We got the team here from Blue Water Acquisition Corp. They are set to do the close. They will also be on the show, and the man himself, Jay Woods, is on deck. We'll talk with Jay and much more. Time now for the bell. And there you have it. A second consecutive relief rally continues here on Wall Street. Your final tail of the tape on this Wednesday. It is Wednesday. It's the first day of the month, the first day of Q2. The S&P 500 up 0.7. The Dow up 0.5%. The New York Stock Exchange Composite Index, in positive territory, 0.4, and the small caps up 0.6 as well. Most of the Mag 7 in higher territory. Alphabet shares the outperformer, up 3%. Microsoft down fractionally. Boeing, Caterpillar, and Amazon, those are your Dow leaders. Nike, the laggard of laggards today, down 15%. Chevron and Verizon, your other Dow laggards as well. Let's bring in Jay Woods, Chief Market Strategist at Freedom Capital Markets, one of our favorite kickoff guests. Thanks for being here, Jay.
Hey, great to be here.
So you've been calling this for the last several weeks a bend, don't break market.
Yeah.
But a market that as of late has shown at least a few cracks.
Yep.
Another relief rally today. Where do you see things standing?
I think the market cracked. Once we got below some key levels, those October, November lows, that 200-day moving average, we saw an acceleration to the downside. So every time we sell off, we go another leg lower, and we get some relief rallies. Those relief rallies are usually triggered by some positive tweets, some hope that we may have the end of this escalation in Iran. And now, what are we watching for? We're watching for April Fool's Day. No jokes yet, but we want to see if this is just a relief rally or if the president at 9 o'clock says something to upset this market. It's going to be very fascinating to watch how we react, because many times he's spoken and talked the market up and the market has rallied. Mm-hmm. This market has a little boy that's cried wolf attitude, where we're not sure we're going to believe him this time if he thinks we're going to rally. So tomorrow could be telling. We want to get back above the 200-day moving average. It's not the line in the sand, but it will tell us that this market has sustained a major blow, and we can get back to hopefully some neutrality and go sideways a little while, or maybe back on an uptrend. So
sideways is a direction.
It is a direction.
As I learned from the great Jay Woods, a lot of analysts have said that so-called Trump put doesn't quite have the same impact today that it did, given headline fatigue, and we'll see what the president has to say. We expect him to kick off those remarks.
It will be telling tonight. Tonight will be
early.
9 o'clock, I'll be asleep, but I'll wake up early and I'll find out what he's saying.
I'll stay up late and catch it as it happens. I want to ask you about NVIDIA. Held this week at 165. You were watching a few key technical levels. How important was that particular support level, given how range-bound, for the most part, the stock really has been since November?
Well, this stock is the poster child for the disconnect we're seeing in the market. The earnings are phenomenal. I mean, the earnings growth is there, yet the stock doesn't go higher anymore. Why is that disconnect there? We're seeing it throughout all of tech. We're seeing those software names continue to be beaten down. Microsoft didn't even close up today. So if NVIDIA can hold these levels, I think it will be the stock that leads us back. But right now, when they're hitting those stocks I call the generals, the biggest stocks out there, those Mag 7 names, it is not going to take this market much higher. So when energy leads, which it's had a nice run, that is not the leadership we need. So we need to see the rotation back to some of these generals. I think Alphabet is the one you want to be in, but we need the tide to lift a few more of these boats. We're not seeing it.
I hadn't expected to ask you about Microsoft, but since you mentioned it,
Yeah.
it was the only Mag 7 name down today, about 0.2%. This was the worst quarter, Microsoft Q1.
Yeah.
It's had going back to the '08 great financial crisis. What's going on with Microsoft?
Yeah, very concerned about what's going on. This AI story continues to be the story of the year, but it's getting hidden now behind other headlines. Is AI going to disrupt AI? And Microsoft is one of those leaders in that sector where a lot of the things they do are being replicated, and people are concerned. Right now, the earnings is there, the growth is there, but people are trading this a year or two out, and they're moving into those, picks and shovel stocks that have tended to do well. Ironically, the staples haven't done that well, but for the most part, those material stocks, those energy stocks, they're catching a bid, but it's not enough to lift this market. Microsoft 365, that's a level I'm a little concerned about on a 5-year basis. It has rumblings of the end of .com with Microsoft, but I don't think it's rumblings of the end of the AI story at all overall.
I want to get your take on Nike. You and I here are looking at this massive
know
gap
it,
down
yeah,
to 44.
I know
You're
it
talking the
will.
lowest level
Yeah.
and split adjusted, but lowest level since about February of 2015.
Yeah.
What levels had you been watching for, and what's your take on where it is today?
When I teach my class from Fordham University, who's here right behind us,
Shout out Fordham.
basic introductory to technical analysis, you have uptrends and downtrends, and Nike, sadly, is in a textbook downtrend. We were hoping, and hope is not a plan, that Elliott Hill could start to turn things around. He's starting to execute, but there are China concerns, and then when you look at it from a price point of view, we just broke down to 8-year lows. Below 50 was something that this technician did not want to see, and now it's going to take us at least another quarter, 3 months to get back and try to turn the ship around. But Nike is a stock that right now the luster is worn off, and when it's going to come back, we don't know. There are a lot of better vehicles to be in. I like uptrends, and Nike is not in one of those.
Yeah, of course. We had the tariff storyline with Nike last year as a major headwind. And, of course, but by a long shot, the worst performing name in the Dow today. Jay Woods, thank you for being here, and thank you for being
Thank
your
you.
amazing class down here.
shout
Thank you,
out
everyone,
to
for
them.
coming here to Fordham.
All right, there you go.
Jay's awesome students. Thanks for being here. We'll talk to you again
All right,
soon.
take care.
Skylar, grab your mic. Todd, you and I head this way. All right, first up, we'll bring you the latest analyst calls here on the day moving markets, and what a day it was. Wells Fargo initiating Boeing as a buy. They say it sees compelling free cash flow upside with a price target of $250 on the stock. Benchmark, meanwhile, initiating Microsoft as a buy. They call the tech giant Jay and I were just talking about a juggernaut, which, of course, like we said, just came off the worst quarter it's had since 2008, the worst performing Mag 7 stock year to date as well. Finally, Raymond James upgrading UNH to outperform. They say, finally, at long last, we see this as a bit of a compelling entry point, giving it a new price target of $330. UNH is down 56% from its previous all-time highs. Used to be the most weighted, the most important name in the Dow. Been a while since it was in that category. Todd, we'll take a look at two notables before we toss to break. How about Redwire, an interesting stock today, having a very strong session, up almost 7%. This company is responsible for some of the imaging, the navigation tech for the Artemis 2 mission, which will blast off in about 2 hours' time. Shares of Redwire Corp up 15% already year to date. And Todd, how about Disney? Up fractionally, 0.2% or so for the House of Mouse, getting an upgrade this morning from analysts at Raymond James to outperform with a new price target of $115, calling this an attractive entry point. Disney quietly having a pretty nice week, up about 5% from last Friday's close, though down 14% from the start of 2026. And now Money 2020's very own Scarlett Sieber is back to explain how fintech companies really make money. Take a look.
Welcome back. I'm Scarlett Sieber with Money 2020, and this is how fintech companies actually make money. The series where we take fintech buzzwords, shake out the hype, and follow the money trail. Today's headline act, BVNK. the stablecoin rail superstar MasterCard is paying big kid money for. BVNK is the stablecoin-powered payments platform helping businesses move money globally without the friction of legacy banking. Think of it as the connective tissue between crypto liquidity and enterprise-grade payment needs. So how does BVNK actually make money? First, transaction fees on stablecoin and fiat payments, the core engine powering the business. Second, FX and spread capture when businesses convert between digital assets and currencies. Third, infrastructure fees for API-driven payouts, treasury tools, and settlement services. And fourth, enterprise services like compliance, risk tooling, and custodial support for regulated partners. Let's do a momentum check for a second here. BVNK is suddenly everywhere in the headlines because MasterCard just announced a deal to acquire BVNK for up to $1.8 billion, including $300 million in contingent payments. The combined offering will deliver a chain-agnostic digital asset infrastructure stack. Try saying that 10 times fast. So what is BVNK's mode exactly? It's all about the flexibility. BVNK isn't tied to a single chain, currency, or ecosystem. They provide stablecoin liquidity, banking connections, settlement tools, and treasury automation, all under one roof. And that, my friends, is how BVNK actually makes money. By putting stablecoins in a suit, giving them a day job, and making the move like real infrastructure. With that, back over to you.
Welcome back to the show. You're watching Taking Stock live from the trading floor of the New York Stock Exchange. And Janik Malling joins us now. He is the co-CEO of Public, here to talk all about the intersection of agentic AI with personal portfolio management. Man, oh man, what an announcement this week. Congratulations.
Thank you so much.
So you're introducing AI agents to manage portfolios.
That's right.
Full transparency. I've already signed up for the wait list directly on the
Great.
Public app. What are you
Wonderful.
hoping this does for the everyday investor?
Look, I think it's a big user interface shift, right? Every new technology brings about a new kind of brokerage model. We used to trade on the phone, then went to the web. We had the discount broker. With the shift to mobile, we had the neo broker. And I think with AI, we're now in the era of what we call the agentic brokerage. And so instead of having to buy 100 shares of Apple at this price, it changes the user experience to be more about instructions, expressing intent. So instead of buying the Apple shares, you might say, increase my position when valuations compress another 20% from here, or if certain multiples go in various directions. And so we're very excited about how this sort of helps individual investors in particular have many more resources available to manage their portfolios.
You know, it's one thing to trust a wealth advisor who's a human being. People are going to see this announcement, as exciting as it is, and say, where do I draw the line? How much input, how little input do I have relative to the agents? How are you approaching that, especially for something that could be as choppy as trading options? That's not easy for the first-time investor.
No, so we've designed this in a way where there's a lot of guardrails around it, and it really is a very conversational AI model that will help you flush out whatever strategy you want, whether it's a risk management tactic that you want to implement, whether it's money movement. I have one that looks at the oil prices every morning, and if they spike, it automatically implements protective puts in my portfolio, so I don't have to see all these red dates. I mean, the last couple of days haven't been that bad, thankfully. And so we really think it's a big change in how a lot of people can do things like risk management, automate trading strategies, and the like.
Yeah, I mean, one thing, again, it's not to give a personal plug here, but one thing I've always liked about the Public app, you always have instructions, video instructions, especially as you introduce first-time investors to more complicated investing strategies. What can people expect if they hear this and they say, hey, I really want to make sure, Janik, I know what I'm doing before I turn over this sort of work to an agent?
I think that's really one of the keys about this product. Once you're in a conversation with AI, there's a big educational element to that. It can help you understand exactly what a strategy might mean for your account, right? And so that conversational interface we actually think is a huge unlock for people to become more sophisticated without necessarily having to read through hours and hours of YouTube content, reading all the Greeks, understanding an options train. If you can say, hey, here are my parameters, I'm looking to make $5,000 this week selling covered calls, but I want to take low risk, I don't want to get called on it. The AI can do all the work and fill the gap in between having that idea and then implementing the strategy, and that is the big user interface shift.
Yeah, no disrespect to the Greeks, by the way. You got to learn the basics and the trading technicals if you're in the stuff. Even taking a step back from this big announcement for you guys at Public, what do you see as the near-term future of AI-driven invest in? You got to have some sense of what
Oh,
comes
100%.
even right after 2026.
We were actually the first and still the only brokerage, I believe, to have an officially maintained open clause skill. That has been absolutely on a tear. Volumes are doubling every month in that business. And so we think there's generally two models. There's the fully autonomous sort of open clause model. You have zero control. There's a lot of security risks you got to mitigate. You got to learn how to set some of this stuff up. What Agents Inside Public does is kind of different. For one, once you've designed your strategy, it runs in a deterministic fashion, so there can be no hallucinations. Instead of no control, you have full control and full transparency, by the way, because you see every single action that the agent is taking, and obviously because it runs inside your public.com brokerage account, there are no security risks for you to worry about, and it's protected by the same bank level security that protects your portfolio and all your assets.
I got less than a minute left. General trends you're seeing for the retail investor here in 2026. I know you and the team at Public, you got to keep up with all the trends and the demands that they're asking for.
Oh, absolutely. I think diversification has become a huge topic, right? Like a lot of people talk about Bitcoin is the new gold, then it turns out maybe gold's the new gold. You know, the bond market continues to be kind of very interesting because I think 12 months ago, everybody would have maybe expected rates to just go much further down than they have been. And so I think, again, AI can play a really big role in helping people diversify more, think sort of about their portfolios from a little bit of a different lens than what they used to do when they're just looking at tables and buy buttons.
Jack, finally nice after all these years to finally meet you. Thanks for coming down and
Likewise,
for being
man.
on the
It's good
show.
to see you.
Congrats on the
Of
big
course.
announcement. Don't go anywhere. A whole lot more taking stock coming up from the big board right after this. Welcome back to the show. Joseph Hernandez joins us now fresh off of the one and only Bell podium. He is chairman and CEO at Blue Water Acquisition Corp. 4. Thanks for being here and congratulations. It's a big day for you once again.
Thank you for having us. We appreciate it.
I know when you talk about potential merger target, there's a lot of information you can't quite yet reveal to us.
Right.
But at least the company has written in filings, maybe something in AI, data infrastructure, advanced technology sectors. Overall, what makes for a good merger partner in your experience?
Yeah, well, listen, we're quite excited to be. First, this is our first listing in the New York Stock Exchange, so we're very excited about that. We've done a number of listings in NASDAQ, but we're excited to be here. They've been great partners to us, and we're looking forward to it. But you know, we truly believe in AI and the role it's going to play in the future of our country and of our world. So we're big believers in that technology. We believe it's like what electricity was a couple hundred years ago. And we're looking for good targets. We're looking for good companies that are going to be transformative in that space. We think energy is a big play. You know, we're looking at energy sectors, small modular reactors, anything that is in the energy spectrum. AI is consuming a lot of energy, so we need to find innovative ways to address those challenges moving ahead. But we're excited. We think the future is beautiful, it's bright, and America's got to lead in this effort. So we're excited to be players in this game.
In what ways have you seen the broader SPAC landscape change? A lot of retail investors will remember a lot of hype in the space back in 2021. How's the conversation around SPACs evolved in your career?
Well, we were part of that cycle as well. We had some successful IPOs there. We just did a recent IPO. We raised $253 million about 9 months ago or so. So we think the market's back. There's going to be a number of really exciting de-SPACings that are about to happen. I think that's going to define the market moving forward. But this is a great vehicle. It's a great mechanism to bring a private company public that wants to accelerate through the process. And we've been really successful with it. We're excited about it, and we think it's an important mechanism to bring companies public.
All right, and the ticker symbol is BWIV, at least for now, if I'm not mistaken. Joseph Hernandez, congratulations.
Thank you so much for having
joining us down here. Come down and see us on the show anytime.
Thank you. We appreciate the exposure.
All right, a whole lot more Taking Stock coming up right after this. Welcome back to Taking Stock. Time now for a few fintech, crypto, and AI headlines for your Wednesday afternoon. First up, Bitcoin is down fractionally at this hour, but ETH, the outperformer, up 1.5%. Next up, Bloomberg first report, Elon Musk's SpaceX is confidentially filing for an IPO, could value the company at north of $1.7 trillion, setting up what could turn out to be the largest public debut in history. And finally, Anthropic scrambling to lock down its systems after accidentally exposing over 500,000 lines of code, and in doing so, raising renewed questions about how security scales towards a public market debut. All right, earlier this week here at the New York Stock Exchange, I sat down one-on-one with Jay Bavisi of the EC Council to talk all about cybersecurity and training the good guys to hack like the bad guys. Take a look. Jay Bavisi joins me now here at the trading floor of the New York Stock Exchange. He is the CEO and Group President of EC Council. Nice to see you again. We met last week at RSAC in San Francisco. You decided to come back for more. Good to have you.
Thank you, JD. Glad to be here.
So let's start now for this audience who might be a bit unfamiliar. Talk to us first and foremost, your work at EC Council, some of your top priorities, and what does ethical hacking, especially in today's cybersecurity ecosystem, what does that actually mean?
Well, we are a ethical hacking company. We are a certification body. We train the good guys how bad guys hack. And the idea is to create cyber defenders. We've been at this for 25 years. We work with major military and corporate America organizations. And the idea is to get the good guys to know what the bad guys will do and stop them before they actually do it. hence the certification, certified ethical hacker.
What are things that the so-called good guys need to be more aware of or need to be doing better?
Well, look, the bad guys are always going to be a step ahead. But the thing is, the good guys were always thinking about having defensive technology. So just think of it, speaking metaphorically, if you're trying to protect your home, one way is to say, I'm going to put on an alarm system and I'm going to put a guard in front. But what if the bad guys come through the back door? What if they were to come through the window? What if they came through the ground or they popped out your roof? So the idea is to get the good guys to be acquainted with what the bad guys do and get them really trained so that they are able to ethically stop a hack before it happens. And that's why they go through a rigorous training, which is renowned worldwide, called Certified Ethical Hacker. And the idea is to put them through the training as if they were hackers.
What does the certification actually look like? The coursework, the classes, what do they actually learn?
A lot of hands-on skills. So they take you through 5 phases of ethical hacking, right? How hackers actually pick an organization, how they actually footprint an organization, how they actually try to determine where the potential loopholes are, then how do they actually exploit, how they actually cover tracks. And we put through the good guys, the tech guys, through the entire 5 phases in a hands-on program across 174 countries in the world.
How has the modern hacker changed in the age of artificial intelligence?
Oh, that's a fantastic question. I think artificial intelligence has made a couple of impacts. One is that the entire attack surface, or just think of an organization as a home or a building. The attack surface for a hacker has just expanded. Because before artificial intelligence, what used to happen 20 years ago when I started EC Council, the hackers used to be pretty sophisticated. They used to get in because organizations were pretty weakly protected. But over time, the awareness of cybersecurity grew, and organizations started having budgets. They started spending on equipment and people and process and training. Regulators picked up and started adding regulations around. And then for the bad guys, it was not so easy to get into organizations anymore. So then they went after the user, the end user. And they say, well, let's not get into the home, but if we can just, tailgate somebody into the home, you still get the same impact.
Mm-hmm.
So that's what happened with artificial intelligence. The propensity of people to use artificial intelligence organization has just grown the attack surface to a very wide area. So I think the first challenge that organizations are going to face is that now you have a lot more to cover. Everybody has some artificial intelligence app on their iPhone, on their laptop, right? And then organizations are implementing artificial intelligence left, right, and center. Some of them are even renaming themselves with the AI.
Oh, yeah. So-and-so.ai, of course.
Right? Because you know what? The capital markets, Wall Street, pays when you use artificial intelligence. But the question that we really got to ask ourselves is, how are organizations adopting artificial intelligence? Are they thinking through the governance models? Are they thinking through the risks? Are they thinking through if something were to go wrong, how do I actually backtrack? Are they thinking where the guardrails are? How are they defending artificial intelligence? All of the cybersecurity folks that I built and the industry has built has been hacking laptops and servers and systems in the cloud. Do we have professionals that can hack LLMs, that understand how agentic AI works? That's important. We got to get the good guys to retrain how AIs work. And then all the governance professionals, how are really having governance around AI? I mean, we're implementing AI, but are we thinking about, well, how do we do responsible and ethical use of AI? So adoption, defense, and governance become the 3 largest tenets of the AI world as we go on.
By the way, any thought to ever rename the company ECCouncil.ai?
No, thank you.
No, I didn't think so.
Because I think AI is now, next is going to be quantum. So technology is going to keep evolving and there's no need to change. Our mission is to get the good guys to know exactly what the bad guys are going to do and prepare them to stop the attack before it happens.
Jay, really nice to welcome you down here to the New York Stock Exchange. Thanks for coming to see us.
Thank you, JD. Glad to be here.
Come back to New York anytime.
Thank you, sir.
All right, your final tail of the tape on this Wednesday, April 1st, the first day of the month and the first day of Q2. The S&P 500 in positive territory, 0.7. The Dow up 0.5%. The New York Stock Exchange Composite Index in positive territory, 0.4. And the small caps, the Russell 2000, also eking out a gain, up 0.6%. Tomorrow morning here on Wall Street at 8:30 a.m., the latest initial and continuing jobless claims numbers for your Thursday morning trade. We will get comments in the afternoon session from Lori Logan. She is, of course, the Dallas Fed president and a voting member of the FOMC here in 2026. And then the following day, markets will be closed, but we will get the March jobs reports to digest first thing on Friday morning. That's going to do it for this Wednesday edition to kick off Q2 of Taking Stock live from the trading floor of the New York Stock Exchange. Have a great night. We'll see you back here from the big board tomorrow.